Jesse Lauriston Livermore is a genius of stock trading. Most beginning speculators lose money in the market, but there are those who do not give up and become the best. Beginners look up to them. Books are written about them. Jesse Livermore is one of the first trend traders, author of How to Trade Stocks, the most famous bear in the market. He made millions of dollars in the stock market, especially during economic crisis, but he lost just as much. We tell the story of Jesse Livermore, dubbed the Wall Street Bear. Childhood and youth. Jesse's parents were poor farmers from Massachusetts. American author Richard Smitten wrote in a biography of Livermore. His first job in life was picking up boulders from the ground with a plow. And it was the late 19th century. From childhood, Jesse was good at counting, especially in the mind, and had a good memory for numbers. In school, he took a 3-year course in arithmetic in 1 year. But his father believed that school was not necessary for a simple farmer. He forced his son, who was 14 at the time, to abandon his studies and work full-time on the family farm. Jesse pretended to agree to his father's demands. However, he conspired with his mother, and a couple of weeks later fled to Boston with $5 in his pocket. After arriving in the city, Livermore took a job at the brokerage firm Payne and Weber, where he was in charge of the quotation board in the trading room. Because he was good at math and had an excellent memory, Jesse successfully memorized stock price movements. Gradually, he began to discern a pattern. Stock prices moved up and down in waves, and if they began to rise, they rose for a while before something stopped them. Later, he learned to predict whether a stock would fall or rise, and he kept a notebook, recording where he guessed and where he didn't. He did not have enough money to trade at the stock exchange with real brokers, so he made his first deal at a stock exchange, but in fact a bookmaker's office, which took bets on the rise or fall of stocks. A buddy at Payne and Weber suggested he invest. They chipped in and won. Livermore got $3.12. Soon he was making more money from betting than his day job. At 15, Jesse made his first $1,000 from betting at bookmakers. Today that would be about $20,000. By the time he was 16, he had accumulated more than $1,000 and went home to visit his parents. He paid off half of that money with his mother, who helped him get off the farm. He continued to place bets at the shops, but after a while, he was forbidden to go to the shops. Great success at the New York Stock Exchange. After a while, Livermore moved to New York. There were no such brokerage houses there, so he went to the New York Stock Exchange. However, the style of trading here was different. At a brokerage house, transactions were completed faster, while at the exchange, he had to wait for his orders to be executed. Time delays meant that Jesse often bought shares at the wrong price. Livermore was not able to beat the Wall Street market the way he did in the brokerage houses. Eventually, Jesse went bankrupt and owed money to a broker. With the help of offices in other cities, the trader managed to earn a certain amount of money, pay off his debts, and even make a profit. But he was already known everywhere, and there were fewer and fewer places to bet. Livermore decided that from now on he would only trade at the stock exchange. At the age of 22, he had $10,000. And then he began buying and selling stocks on the New York Stock Exchange again. Over time, the determined speculator gradually learned from his mistakes. The year 1901 was marked by a panic on the New York Stock Exchange. Trading volumes in quantitative terms rose from 250,000 shares a day to 3 million, wrote Richard Smither, the author of the book about Livermore. On one very unsuccessful trading day, Jesse lost $50,000. The reason was that the broker wasn't able to execute orders at those prices, which were declared by trader. However, it was then that Jesse realized that time delays have a significant impact on stock quotes. For this reason, short-term trades, sell trades, on Wall Street were difficult to execute at the trader's favorable price. Livermore had always stuck to his intended plan and his rules, but in 1906 he made money through chance. Jesse shorted Union Pacific Railroad Company stock. The devastating earthquake in San Francisco caused the market to crash, and the trader traded $250,000, the earning of the first million. October 24, 1907, was a memorable day for the trader. At that time, for the first time in his life, he earned more than $1 million, playing on the decline. At this time began the banking panic, later called the first global financial crisis of the 20th century. Banks and trust companies faced the flight of their depositors. Due to the significant outflow of capital, they had to stop issuing short-term loans due to lack of funds. It was these loans that were used by brokers, who, in turn, borrowed money from their clients. The result was chaos on the stock exchange. As Smitten wrote, John Pierpont Morgan himself, a famous banker and financier, asked Jesse to play more short that day so as not to make the market worse. Morgan made his request through an intermediary, and Livermore agreed. It was then that he earned the nickname, the Great Bear. The next day, he closed all short positions, which warmed up the market, and then began to buy up hundreds of thousands of shares of various companies and pour them back. By the end of the day, Livermore had $3 million in his accounts. A few months later, however, Jesse lost money in a failed cotton trade on the Chicago Mercantile Exchange. Livermore was on his way to bankruptcy, but failure never stopped him. Within a year, the trader managed to earn $5 million again, and in 1925 he began trading on the Chicago Mercantile Exchange again. This time trading wheat and corn brought him $10 million. Multi-millionaire thanks to the Great Depression. The years passed, and a new financial meltdown began, but more serious. In 1929, the U.S. stock market crisis broke out, which gave rise to the Great Depression. On the eve of the crisis, Jesse realized through trial and error that market prices had peaked and would soon begin to decline. Livermore began trading again, opening mainly sell orders. During this period, he earned $100 million. Today, that amount is roughly equal to $1.5 billion. Some even blame the trader for the stock market crash of 1929. He received death threats and kidnappings, but all came out of it. It's hard to imagine how quickly and easily Jesse was able to lose $100 million, but that's exactly what happened in the 1930s. The great trader was possessed by the excitement of trading deals. He neglected his own rules of trading, which he had previously adhered to. After the Great Depression, the United States established the Securities and Exchange Commission, which formulated rules and standards of operation and behavior of market participants. This prevented Livermore from trading as before, and since then, he has not been able to achieve his previous financial successes. We hope you enjoyed this video. If you give it a thumbs up, we would be very grateful. Don't forget to subscribe to the channel and click the bell so you don't miss new videos. Thanks for watching. See you in the next video.